A lot of data out this week concerning Australia and China, some of which could potentially affect the trading relationship between the two nations. Lee Hardman, currency analyst, is on the phone to me now to talk through these releases. Lee, welcome to Dukascopy. Now, the Chinese manufacturing PMI out on Tuesday was hovering just about the 50-point line, indicating slight growth in that sector. As a main trading partner, can the Australian economy breathe a sigh of relief here, or is it still too close to call?
Well, I think the main sort of signal from the PMI data from China recently has been that the Chinese economy appears to have lost growth momentum in the third quarter as a whole. We were obviously particularly worried by the sharp drop we saw in industrial production data in August, and we're also seeing more broadly as well selling pressure intensifying in global commodity markets, particularly in the industrial commodity space, and that to us is also consistent with a view that the Chinese economy has lost growth momentum in Q3. So we think at this stage the downside risks are increasing to growth in Australia and also to the Australian dollar because of the weakening growth outlook in China.
Australia data out today shows that the trade deficit narrowed to 787 million Aussie dollars in August. Exports fell 2%, while imports were down 3%. So what does this mean for an economy that relies so heavily on exports, especially precious metals?
Well, it looks like net trade will make a positive contribution to growth in the third quarter after a sizable drag in Q2. But just looking at the trade report on its own, that showed, yes, a weakness in exports. That was fairly modest, and we think that in the coming months we're likely to see a further, more marked weakness in export performance. The recent decline in iron ore prices and other base metal prices has yet to feed through fully into a negative impact on export performance for Australia. So we'll be looking for further weakness going forward.
Now looking to Friday, Lee, and China's non-manufacturing PMI release, what do you hope to see from this data? Will the current Hong Kong protests have any influence on the results? And how do you see their respective currencies reacting?
Yeah, in terms of the Hong Kong disturbances, we don't anticipate that that will have a material impact on the PMI data later this week. But the general picture again should be one of the economy having lost growth momentum in Q3. So far, the Chinese authorities seem somewhat reluctant to materially ease policy to support growth. So I think they're generally comfortable right now that the economy is slowing, and that's seen as part of the adjustment process to help rebalance the economy. But obviously, if we were to see more worrying signs of a sharper slowdown develop, that could prompt the authorities in China to look to ease policy going forward.
Thank you, Lee, for your insight. That's a lot of interesting points made. Well, that's it from myself, but Dukascopy TV is regularly updated, so do stay tuned. Bye for now.